Investors in Constellation Brands feeling a hangover today after the stock fell 6%. Despite strong earnings, it's today's buzzkill, the culprit behind the drop. Cannabis, specifically Constellation's $4 billion stake in Canopy Growth, but pot stocks weren't feeling the pain. The group lighting up today on a smoking hot streak led by Canopy and Aurora Cannabis. So why are these sinful stocks trading so differently?
So much fun in there. We had so much fun.
Punditry.
So first of all, in terms of Constellation Brands, there's no surprise here as to what's happened with the investment in cannabis. They were early. They wanted to be early. They made a commitment. They've reaffirmed that commitment. As far as I'm concerned, I don't think there's any hesitation at Constellation as to what they're doing. I actually met with the CFOs of all three companies that are essentially together now. That includes Acreage. And the commitment is resounding. So ultimately, their core business, first of all, beer was better, margins were better, depletion rates were better. And I think the valuation makes a lot of sense. In terms of what's going on in the cannabis space, well, first of all, you've had vaping headlines. You've had a number of companies that frankly could not forecast their business and did a very poor job in terms of telling you where the growth was they were supposed to deliver, this hockey stick moment for a lot of these companies that frankly has never come. So I think the industry has done a lot of it to itself. A lot of these companies also use their stock and essentially as a currency to go do other acquisitions. And therefore, people that are cynical will say there was misalignment between investors and the companies themselves. The companies were incented to get that stock price up so they could go out and do deals. And therefore, there's set up for a lot of disappointment. But the devastation in the cannabis space, if you think about it, I mean, Canopy at one point was down almost 55% off of levels in April before this bounce. Last week was the down week for the sector where you had a lot of stocks down 20 to 30%.
Well, I mean, the expectation for earnings season aren't that great either in terms of what's coming next for a lot of these stocks. And so there's some, readjustment of earnings estimates and expectations going in. Yeah, so that brought them down as well.
But think about what we talk about on the show: story stocks, Netflix, WeWork. I mean, these are companies, if they're not making money and they have no sign of making money.
So this is another
they're absolutely
bucket.
Absolutely. Now, I don't think that that's Canopy Growth. I think it's a company also that has $3 billion in cash in their balance sheet at a time there's extreme pain. I think they can be very opportunistic now, and I am long the stock.
I'm with you. Here's the thing. There are two types of weakness, right? There's weakness to stay away from, and there's weakness to take advantage of. And you have to decide which it is. In this case, I think you take advantage of it. This quick sell-off, very meaningful percentage, 210 to 190, a lot of support here. I think it's actually an opportunity, not a problem.